Today we'll be zooming into IONQ, a quantum computing company. Now there are many approaches to quantum and even more companies going after this market, but in my opinion it's likely for IONQ to come out on top. And if they do, this stock might go 100x in the next 5 to 10 years. Today less than 15% of you guys are subscribed. And if this thing gets big enough, I might just go full time. So if you want to see that, hit the subscribe button and share the channel with your friends. Let's dive into IONQ. Quantum is very complex, so when it comes to understanding this technology, I want to make sure I set your expectations. Here's Ramamurthy Shankar, professor of physics at Yale and the guy who actually wrote a book on quantum mechanics, setting the stage for us.
Now, I got bad news and good news. The bad news is that it's a subject that's hard to follow intuitively, and the good news is that nobody can follow it intuitively. Richard Feynman, one of the big figures in physics, used to say no one understands quantum mechanics. So in some sense the pressure is off for you guys because I don't get it and you don't get it and Feynman doesn't get it. The point is, here's my goal. Right now I am the only one who doesn't understand quantum mechanics. In about 7 days all of you will be unable to understand quantum mechanics. Then you can go back and spread your ignorance everywhere else.
Let's start with some basic concepts. Today's computers operate using strings of bits, so ones and zeros. Quantum computers use something called qubits or quantum bits. These cannot only be either 1 or 0, but actually any possible combination of 1 and 0, until they are measured, at which point they collapse to either 1 or 0. Next is entanglement, and here's where things get really complex, so you just have to take my word for it. Entanglement is what happens when two or more qubits become linked together so they no longer act independently, even if they're light years apart. Once entangled, they behave like a single object instead of separate qubits. And the moment you measure one and it collapses to either 1 or 0, all the others collapse at the exact same time to perfectly matching values, faster than light could travel between them. Now let's use a simplified experiment to show the difference in strength between a classical computer and a quantum computer. Let's say you do 300 coin flips. The number of outcomes is actually massive. It's 2 to the 300th, or this massive number at the bottom of the page, 91 digits. Let's say your objective now is to find one specific combination among these 2 to the 300th possible combinations. And if you would use a classical computer, it would be like one person doing 300 coin flips 2 to the 300th times in a row to find that specific combination. It would take longer than forever. It would be impossible. Now let's say you take a quantum computer but without entanglement in their qubits. It would be like 2 to the 150 people doing that same 300 coin flips at the same time. It would already be massively faster. 2 to the 100th is this large number at the bottom, but it would probably still not be feasible. Now let's say you take a quantum computer with entanglement. This would be like 2 to the 300th people, so if you get this many people, doing that same 300 coin flips at the same time to get to that one specific outcome. You would get there way faster, it would actually be feasible this way. So let's conclude that these computers are unimaginably faster than classical computers, and that makes them capable of performing tasks that today are simply not possible. Think about breaking today's standard of encryption, perfectly simulating molecules, designing new materials, and solving huge optimization problems. So here's a paper from 1995 in which those two concepts that we just discussed were proven for the first time. So there was the first quantum logic gate, or taking a qubit and collapsing it to either 1 or 0, and the first entanglement of two qubits. So this paper was written by Chris Monroe, who is the co-founder of IONQ. There are two main approaches to building quantum computers, and we will compare and contrast them here. So there's trapped ions and superconducting. With trapped ions, individual atomic ions are held in a vacuum by electromagnetic fields. Each trapped ion is a physical qubit, and this is the technology that IONQ is using. With superconducting, artificial atoms are made through something called Josephson junctions on a chip. Qubit fidelity. Qubits are extremely fragile and they easily lose their quantum state, leading them to become decoherent or resulting in errors. So they need to be manipulated in a way that they can create the least possible amount of errors, and the lower the error rate, the higher the fidelity. Here trapped ion is definitely the winner. So then for coherence time, so this measures the length of time a qubit can hold its quantum information before decoherence ruins it. Here, trapped ion is a definite winner with coherence times of seconds until minutes even, whilst the coherence time for superconducting is more like microseconds. Then gate speed. This actually describes how fast we can do operations on a qubit, and superconducting wins this by a mile because the neighboring qubits are directly wired together on the chip with electrical connections. So trapped ions, they're much slower because it's lasers that have to nudge the ions through their shared vibrations to connect them, and the gate speed is so much faster for superconducting that it almost offsets the lower coherence time and qubit fidelity. So looking at temperature requirements, in both methods you actually need to chill the qubits to extremely low temperatures, to close to absolute zero, which is about minus 270 degrees Celsius. But the way they get there is quite different. So for trapped ions they use lasers to chill the ions themselves, and the rest of the machine can stay at room temperature. Whilst for superconducting, the qubits require giant refrigerators to cool the entire chip as well as the wiring. So the whole processor basically lives inside a huge ultra-cold fridge. And this subsequently has an impact, of course, on power consumption, which is therefore relatively low on trapped ions and quite high for superconducting. So the manufacturing difficulty is quite high for superconducting due to all the refrigeration, but scaling is actually easier because the chips look much more like regular semiconductors, whilst for trapped ions the use of individual lasers to control and cool makes it a bit harder to scale. And mainly because trapped ion systems don't need this massive refrigeration, both the footprint and the total costs are much lower. So let's pivot to IONQ after all these generalities. So here are the two co-founders. There's Christopher Monroe. He's the one who published that article in 1995. Really nice background. Currently still the chief scientist of IONQ. And then there's Jung-Sang Kim, who doesn't seem to have an active role with the company anymore today. The split between their responsibilities seemed to have been that Christopher brings more the theoretical background, where Kim brings more of the engineering background. And you need both, of course, to build these quantum systems. So let's go through a brief company history. In 2015, they were founded with about 20 million in funding from Google Ventures, Amazon and NEA. In 2019, they raised another 55 million from Samsung and UAE funds. And then they go public on a stock exchange via SPAC, as we've seen with a few other companies that I invest in as well. They go on a bit of a spending spree in 2025, acquiring multiple companies. We'll go into that a bit. And in 2025, they also named their current CEO, Niccolò De Masi, in what seems to be a real drive for commercialization. So let's have a brief look at some of the people on the management team. There's Niccolò that I just mentioned, the new CEO. He was CEO at 7 different companies prior to this role. He has quite an aggressive style, really energetic, a bit of a founder mentality, it seems to me. He reminds me a bit of Alex Karp from Palantir. I think this type of energy is what you really need when you want to roll out a roadmap as ambitious as IONQ. So I'm quite impressed by him. You have Chris Ballance here, who's the co-founder of Oxford Ionics, the company that IONQ acquired recently. Same for Mihir, the founder of LightSync, another company that was acquired. We'll go a bit more into what these companies do and what they bring to IONQ later. Robert Cardillo is the executive chairman of IONQ Federal, a subsection of IONQ that's rather new, focused specifically on government. He was the national intelligence advisor to Obama and has a long list of experience in US national intelligence. Scott Millard, who just joined this month, I think, spent 26 years at Dell, final role as senior vice president global AI sales. And then Margaret Arakawa, a chief marketing officer who spent 20 years at Microsoft, in her last role running the US Windows division. So I think it's quite a nice balance between real scientific profiles, which are important to have on the board as they're incorporating these companies, the federal angle, and then some real solid commercial drive with these 3 guys. So overall, it seems like a good mix of talent. So let's have a look at the ownership of the company. I had to compile a few different data sources, so it might not be 100% accurate, but I think it's pretty close. So first of all, you have the current management team with the CEO, Niccolò De Masi, and Chris Monroe, the co-founder, each holding about 1% in the company. You have the co-founder that is currently doesn't seem to be super active, about 2%, and then you have some ex-management team members holding about 1% each. So nobody has a really big stake in the company, nobody can really move things, which, okay, maybe would have been nicer if Chris Monroe had a big stake so that he can ensure the future, but that's not the case here. You have big institutional investors that hold a big share of it, probably through ETFs and things like that. And then you have about 65% that is in the other bucket. The main information for this is coming from their latest proxy statement, which was from April, and that was was before they did their main acquisitions. They acquired about 4 or 5 companies in 2025, and a lot of it they paid for with shares, but that detail is not yet included here in this proxy statement. So when the next one comes out, we'll be able to have a clearer view, I think. And you clearly see this move for using their stocks to purchase companies in the shares outstanding. So they had about 200 million shares outstanding after their SPAC when they went public, and currently they have about 350 million shares. Here you see quite a steep increase, and like I said, they use these shares to acquire the companies that they did and to get funding. So this dilutes the existing shareholders, but it is also what is required for a company to grow if you don't want to take on too much debt. So there's 2 main components to scaling a quantum computer. There's the performance or the error rate or the fidelity of the qubits, so how error prone are they, and then there's the size or the number of qubits that you have in your system. And there's a relation between the two, because the more errors you have, the more error correction you need to do and the more qubits you need, and the other way around. On the left side of the table you see it's mostly superconducting players, so they have more qubits than trapped ion, but the performance is lower, and the other way around. Here you see IONQ and their acquisition of Oxford Ionics, Oxford with the highest performance in the market today. And so one of the statements from Chris Monroe apparently is that error correction is only something you do when you don't have good hardware. So they are really trying to achieve a really good performance of their qubits, and they've done so by acquiring Oxford Ionics, who has a gate fidelity or the inverse of an error rate of 99.99%, which is the best in the market today. And the nice thing is that they do this through electronic qubit control, whilst before they did that with lasers at IONQ, which is making it quite hard to scale, as we mentioned in the beginning. This behaves much more like a regular semiconductor with these electronic qubit control, which will help them to scale eventually. So that's a really interesting integration into IONQ, and the technology between the two approaches are relatively similar in a way that they can integrate this technique, the electronic qubit control, in quite a smooth way. So the first step is to build a quantum computer. But next, they want to increase the scale to data center scale quantum computing. And they bought this company called LightSync to enable them to do that. With their technology, they could hold quantum states long enough to spread computation across large networks, which is needed to build real quantum data warehouses and scaled quantum clusters. And what they compare this acquisition to is the acquisition by NVIDIA of Mellanox, which allowed NVIDIA to scale from single H100 GPUs to data center scale GPU computing. So here you see the company's roadmap for scaling their quantum computing, and this is the thing we need to keep an eye on in the coming years. So the orange line shows the physical qubits, so the number of qubits in their system, and the gray dots, they represent the logical qubits. So these are not just qubits in the system, these are the actual entangled qubits, which, as we've seen in the coin flip example, is where the real money is. So it's quite an aggressive increase. As you can see, this is a logarithmic scale. So if they manage to do it, that would be great. The nice thing is that with the introduction of Oxford Ionics, they achieve an error rate which makes this possible. Because if the error rate is too high, you need so many qubits to get these logical qubits that it would be unfeasible. But with their 99.99% fidelity, the road to clear this 2 million physical qubits and 80,000 logical qubits stage by 2030 is wide open. IONQ is already making revenue today by selling their systems and giving access to their systems via the cloud. So as you can see, they've already had several iterations and are planning out these different systems along with their roadmap that we showed in the previous slide. So their estimation for the unit economics of their system, if they manage to execute on their roadmap towards 2030, is very similar to what we just discussed in the beginning when comparing trapped ions to superconducting. The cost of the system will be much lower, around 30 million they estimate in BOM cost, versus 1 billion in superconducting. The power utilization will be much lower and the footprint will be much smaller. So as quantum computing advances, it also creates risks. And here's a nice quote from the US Department of War Research and Engineering to illustrate that. Cryptographically relevant quantum computers, CRQCs, may be possible in as soon as 3 years. CRQCs would break all current encryption keys, posing an existential threat to national security and the global economy. And so this might not be possible today to crack all these codes. What they think is going on are practices called harvest now, decrypt later, where people download big data sets and they will sit on them waiting for the technology to be there to decrypt them. To play into this risk, IONQ has acquired ID Quantique to deliver quantum key distribution products, securing their customers' data using quantum technology. Moving beyond their ground stations, they want to take this up into the air. They acquired a company called Capella Space Corporation, and through their satellites they will distribute their quantum-secured communication as well as their entanglement throughout the globe, creating what they envision to be a global quantum internet. So putting all of these different pieces together, they will create what they call a one-stop shop for quantum. They will make their big quantum clusters, supplying a lot of the most relevant components that can be accessed either on-premise or via the cloud. They will have third parties developing applications for it. They will secure everything to, in the end, create one big end-to-end quantum network. So as we've seen in their roadmap, it will still take quite some years before quantum will deliver on its promises. But in the meantime, IONQ is working with top-tier enterprises such as Samsung and Nvidia and government agencies such as DARPA, which gives confidence as an investor that they're on the right track. So let's have a look at their financials. The top line, you see their revenue per quarter. You see that there's quite a nice increase over the past few quarters to about 40 million in Q3. They expect about the same in Q4, also 40 million. Operating margin is still, of course, very negative, which is normal in the stage where this company is at, so about minus 400% for the current quarter. Then when we look at the breakdown of revenue, so here's again that $40 million in revenue for Q3. It's about 50-50 between the hardware they deliver and the services. And when we look at the different areas, you see that 72% of the revenue is coming from the US. And when you look at the sources of their revenue, so basically what they do is they sell their systems and products, and they offer cloud services, so access to their systems via the cloud, which they do via third parties like Google, AWS and Microsoft, and via their own cloud service. Now let's look at the cash flow from operating activities. You see that this goes down from 53 to 123 in the quarter, which is quite a lot. Of course, there is the revenue increase, so a bit more cost of goods sold. They've also acquired a few different companies, but I have the feeling that this increase is a bit more steep. So let's keep an eye on that. Of course, it's always good to, when a company doesn't make a profit and they're burning through cash, to compare it to their cash position. Now, if they would continue to burn 123 per quarter, or let's say 125, that would be about 500 million per year. They currently have a liquidity position of 3.5 billion, which would mean that they would have 7 years of burn trajectory to go through before they run out of money. So my guess is that they will probably use this money to do more acquisitions. Overall, they're fine in terms of cash, but let's keep an eye out for this development. So looking at their valuation and stock price, they closed on Friday at $41.70, which is about half of what it was a couple of weeks ago. If you watch my weekly news wraps, you know that I've been praying a bit for a dip in this stock, and I think it's become much more interesting to look at right now. The market cap is about 14.5 billion, and it's standing at a price to sales ratio of 128, which is of course still very high. But as you've seen, the revenue has ramped quite aggressively. So if we take the 40 million revenue run rate of this quarter and what they expect for Q4, they get to a price to sales ratio of about 90, which is already becoming a bit more reasonable. Of course, the promise of quantum is massive. Revenues should scale much higher, but in any case, this drop makes it a bit more interesting than it was before. So I'm definitely thinking about building my position up further. So moving on to competitor analysis, there's a couple of ways you can slice and dice this. So you have the type of company. Is it purely focused on quantum, or is it does it have a subdivision focused on quantum? Is it listed or not, and what is the type of technology they employ? So let's go through the list, leaving IONQ for the moment. So Continuum, this one is pretty close to IONQ. It's also partnering quite heavily with Nvidia. It also is employing trapped ion technology. The main difference is that it's not listed today, so you cannot invest in it. The scale seems to be a bit lower. The valuation is at 10 billion versus 15 for IONQ. Revenue is a bit lower, cash position is a bit lower, but overall I think if it was listed, it would probably also be an interesting horse to bet on next to IONQ. Then you have D-Wave, so pure play quantum company, but they're focused on annealing. So these big gate models, big quantum models can do everything. D-Wave is just focusing on a subsection primarily. They're also working on a gate model, full model in the background. But this is more for optimization problems. And so they also have systems live today. So they're a bit more close to commercialization maybe than the other ones because they're using this subset and they've been working on it for a very long time. Then you have Rigetti. Rigetti is the only real pure play superconducting company. So if that's the technology you think that's going to win, that might be an interesting bet. Then you have IBM and Google, both focusing on superconducting, but of course you get that whole business that they have with it, so you cannot purely focus on quantum. Both of them have benefits. IBM has a really big Fortune 500 relationships that they can leverage. Google has super deep pockets and a lot of expertise. So overall, I think IONQ for me is the most interesting company. The trapped ion technology, for me, it seems more feasible than the superconducting. All that freezing makes it look very cumbersome and expensive. And I like their management team and aggressiveness and their roadmap. So amongst these different competitors, I think all of them can have a place in the portfolio. And since quantum is quite far from being live, maybe the best thing is to have a basket and to not bet on one. But if I would have to bet on one, I think I would choose IONQ. So finally, let's end on the risks. Technology, it's very early days in this quantum race. There might be new approaches that can come up that could leapfrog the current competitors. The valuation, like we said, the price is quite high for the stock, 128 times revenue. It is down from 250 about a month ago, so that's a good development. Dilution, this company will give out shares to fund their operations and their acquisitions. Every time they give out more shares, your ownership percentage goes down, which is a dilutive effect. Ownership, we had a look at. There's no party that really has a high level of ownership in the company. It would be nice to see one of maybe the owners or the CEO or somebody who is really driving the company have a big stake so that it can sort of steer where this company goes. So that's a bit of a bummer. In terms of income, I showed you the first revenue is there, but there's still pre-profit. So this is going to be quite volatile for the coming years, I expect. Quantinuum, their competitor that is quite close to IONQ, that is still private. If they list, they could take quite some attention away from IONQ because it's sort of a quite close competitor maybe, so that could have some downward pressure on the stock. Some of their competitors are giants with really deep pockets. Google, IBM, Microsoft, Amazon, and maybe some Chinese state programs that can maybe throw more money at this problem than a company IONQ could. And then finally, in terms of government support, the current administration is quite pro-quantum, but it could be that maybe a different administration in the future is more hesitant and sees more risks and maybe would push this part of the economy less hard. Overall, for me, these are acceptable risks, and for a company that is just starting up like this, that has so much room left to grow, for me it's quite acceptable. So that brings us to the end of the video. I really hope you enjoyed the content. If you do, please like, subscribe, follow, leave a comment, tell a friend, and I'll see you in the next one. As always, these are my opinions. Please supplement it with your own research before making an investment decision.